Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian equities slip with US futures lower after Nvidia's sales projection failed to meet some of the higher forecasts. The company says its Blackwell chip will ship this quarter. Adani Group shares tumble after US prosecutors charge billionaire founder Gautam Adani over an alleged $250 million bribery scheme. The conglomerate scraps its $600 million bond sale following the indictment. And Ukrainian forces fire British cruise missiles at targets inside Russia for the first time. Bloomberg learns the Biden administration, meanwhile, is planning to cancel $4.7 billion of debt owed by Ukraine. Happy Thursday. A little bit more life being breathed into these markets after a lackluster day. Flat across US equities and European equities yesterday. Looking a little brighter today, despite the fact that Nvidia, in terms of the forecast, they're not coming in quite as high as some of the highest projections. But you're looking so far at European stocks pointing high by 0.3%. In the FTSE 100, maybe a bit of lift from the commodity sector with prices higher there. You're pointing high by 25 points. S&P futures currently down 0.2% though. Nasdaq futures pointing lower by 0.3, down currently 72 points. Let's flip the board and look cross-asset. There was a lackluster sale of 20-year Treasuries yesterday, not absorbed by the markets as well as some had expected. Yields on the 10-year now at 4.40. Euro-dollar at 1.05, with the ECB's Dove Stornaras saying that they could get to that 2% target early 2025. Bitcoin closing in on $100,000, 97,289. Fresh records being made by that cryptocurrency. And Brent trading just shy of $73 a barrel. Let's get to the Nvidia story then, because the chip maker at the heart of the AI boom, of course, has dipped post-market after its revenue forecast failed to meet the highest expectations. During the earnings call, CEO Jensen Huang spoke about the high demand for its Blackwell chip.
We will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell.
Rob Lee from Bloomberg Intelligence joins us now from Hong Kong. Rob, what stood out to you from these numbers?
Well, I guess as we've seen in other quarters, there were solid numbers, nothing raised of any great fundamental concern. Demand continues to outstrip supply by a wide margin. I think, as you mentioned in your intro, whilst the guidance for this quarter did actually beat, it didn't quite match the highest of expectations. And given that the stock's been flirting with all-time highs over the last couple of weeks, inevitably we've seen a bit of profit taking. So I guess one last thing I'd mention, the company, there were some small concerns going into the results, residual concerns relating to the earlier Blackwell delays. So again, we saw no negative surprises on that. So I think it's sort of steady as she goes is the message from here.
OK, steady as she goes. What about the broader industry, the challenges maybe that the broader industry faces, Rob, at this point?
Yeah, stasis, I like that word. I'm a bit of a broken record on this, as you know, but it's monetization. It's the fear of missing out. It's the behavioral aspect which is really driving, I would say, a lot of the capex spending amongst the big hyperscalers and the big tech platforms at the moment. So they're spending like there's no tomorrow. So this is, all your Christmases come together for Nvidia. However, they're not monetizing at anywhere near as fast a rate. So whilst we haven't got we're not at the day of reckoning, I think there is still a risk unless monetization within the industry takes off, that happens at some point, into the new financial year. But we'll have to wait and see.
Yeah, and the concentration amongst those big hyperscalers is still a question mark for some analysts on that stock as well, with revenues coming in, 50% of revenues now coming to those hyperscalers, and some hoping that number would actually reduce to show a further expansion into other parts of the ecosystem. Rob Lee with the analysis. Thank you very much indeed. Breaking down the Nvidia numbers for us from Bloomberg Intelligence, always with the smart context and analysis. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Bit of a mixed picture, Avril.
Mixed bag, but I think a bit of digestion of Nvidia earnings. We see how the infotech is among the worst performing sectors overall. Asian markets look like they're in a pretty bad mood. Among the chip stocks, we are seeing declines for a second day on TSMC. That's the drag on TAIEX you see there, closing down. But some gains in the likes of Samsung. You hear from analysts and how they think that already, we saw earlier in the year how these Asia chip names experience a bit of course correction. So they don't expect a lot of massive selling this time around. Keep that in mind as we see the moves in these chip names. But of course, the one I wanted to highlight today as well is the underperformance in the Nifty, the India stocks, after those US charges against the Adani founder and two other executives from the group of companies. And this is really a very hard hit that we're seeing on the stocks and bonds of the Adani group. I'll talk a bit more about that in a bit, but just flip the board because I wanted to highlight what we're seeing in Japan. We heard from the BOJ governor, Ueda. He's been speaking in the past hour or so, and this line seems significant where he talks about how they cannot predict the outcome of the December meeting. It sounds like they're not ruling out a rate hike. We saw the reaction in the bond market, selling in the 5-year, a jump in the yields. I think it was about 4 basis points. On the dollar yen, it looks pretty tepid in the reaction that we've been seeing in the past couple of minutes or so. Flip the board, take a closer look at this chart, courtesy of MLive's Mark Cranfield. It will show you what Indian markets have been experiencing in the past 2 months. It's been really trying because earnings have disappointed. We've also seen these concerns about high valuation. So these US charges against Adani might just put long-term investors further on the sidelines for even longer and threaten to push the Nifty even below the 200-day moving average. And, you know, you keep in mind that as we see these declines in India stocks and the Adani company stocks as well today, guys.
OK, and that's the perfect setup to do a deep dive on that story. Hwang with a market check there, ending on India and the impact, of course, of Gautam Adani. Thank you for the details there and the market check out of Singapore. Let's get more further focus then on what's happening in terms of the Adani group, because companies are slumping, as Avril was saying. It's having a massive effect across these Indian markets, from equities to bonds. That's after US prosecutors indicted the group's founder, Gautam Adani, and other executives on bribery charges. The New York-based prosecutors allege that Adani and other defendants promised to pay more than $250 million, $250 million in bribes to Indian government officials to win solar energy contracts. Our requests for comment to a representative for Adani Group's US offices were not immediately returned. For more, let's bring in our South Asia editor, Anthony in Mumbai, who knows this company like the back of his hands, has followed this story very closely indeed. Anto, what is the latest then on this case?
The shares of the companies controlled by billionaire Gautam Adani has been slumping in Mumbai trading today. Some of them are down as much as 20% or more. And we are talking about 10 publicly traded companies in India across sectors which he controls. He also had to scrap a $600 million bond sale which was underway in US. The debt securities which are traded globally, and there are a bunch of them, of the Adani Group, has also slumped following the news. So what US prosecutors, the Brooklyn prosecutors, have done is that they have alleged that Gautam Adani and his associates have bribed Indian officials to get solar power contracts. Mind you, at the heart of this is one of the biggest renewable energy producing company in this part of the world. And this company, the Adani Green, is building up one of the world's largest renewable energy park in India. And the contracts are linked to this, which is under question. Now, US authorities are saying that the investors from whom Gautam Adani raised this money, they were not aware of how this money was used and the bribes being paid. So hence the investigations which are underway, and hence the slump in the stocks.
Yeah, and Anto, look, I talked about how well you know this business to give our viewers context in terms of your expertise on this. You've spoken exclusively and relatively recently with Gautam Adani himself, as well as Sagar Adani, one of the key family members, of course, and you did ask them about bribery investigations when you spoke to them. What did they tell you back then?
Yes, it was just two or three months back that we asked the Adani family members, specifically Sagar Adani, who oversees the energy business, about the DOJ investigation. It's a story that we broke at Bloomberg, and we have been covering it over the last 1 year. And here is what he had to say when we asked him the question.
We as a company policy don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
So what we have to keep in mind is that when we were asking the question to them in July, they had already made an exchange filing in India saying that the US prosecutors or US authorities haven't reached out to them with any specific questions regarding the investigation. So we don't know what transpired over the last couple of months, and even the documents which we have seen so far doesn't clearly lay out what was the how they reached out and what was the process followed here. But what is very evident is that with Biden administration on the way out, it will be up to Trump administration to take a call on how to proceed with this. So the analysts and brokerage houses whom we are talking to is saying that to assess any material impact on the group from this, we will have to know how Trump administration will take this investigation forward.
OK, Bloomberg's South Asia editor, Anto Anthony, who I suspect is to be kept very busy with this story, following the twists and turns. Joining us out of Mumbai with the details and the context. A major development, of course, for these Indian markets. Thank you. Let's get to some lines crossing right now from some Fed officials. This from John Williams of the New York Federal Reserve. Of course, we've been hearing from a number of Fed officials with various different and slightly diverging messages in the last 24 hours or so. Fed's Williams saying that interest rates may fall further. This is according to reporting from Barron's. This after, of course, the Boston Fed President Collins suggested that there was scope for further cuts to interest rates, but at a steady pace. So just a couple of other lines coming through from the New York Fed President. It says interest rates may fall further, again, according to Barron's. Let's stay on this story and talk about how markets are adjusting and in terms of the appetite as well, or lack of appetite to further issuance from the US Treasury, because US Treasuries fell after an auction of 20-year bonds, so at the long end, of course, drew weak demand, pushing yields higher across the curve. Meanwhile, Boston Fed President, as I mentioned, Susan Collins, says more rate cuts are needed, but policymakers should proceed carefully.
Monetary policy needs to adjust in order to achieve our dual mandate goals. And while the final destination is uncertain, I believe some additional policy easing is needed, as policy currently remains at least somewhat restrictive.
Let's bring in our markets reporter, Bloomberg's Valerie Teitel, for the context then. Valerie, tie these two things together, what we've been hearing from Fed officials and the market reaction to that 20-year auction.
Look, Tom, the market is currently grappling with where is neutral for the U.S. economy, and could these new administration taking over the White House in January perhaps shift the neutral rate any higher and imply less Fed cuts in 2025? If we take a look about where the market is currently pricing neutral, it is pricing it at 3.8%, Tom. That's implying 100 basis points of cuts to go left for the Fed in this easing cycle, but that remains a big unknown heading into next year. Another big unknown heading into next year, Tom, is just how much pressure these Fed officials will get from the new Trump administration. We had the vice chair of banking supervision, Michael Barr, having to defend his job on Capitol Hill yesterday.
Vice Chair Barr, would you pack up and go if Trump or Elon Musk called to fire you?
Congresswoman, as Chair Powell said, we serve fixed terms of office, and I intend to serve my fixed term of office.
There was Michael Barr yesterday on Capitol Hill saying he intends on serving out his term, which ends in the summer of 2026. Well, the Fed officials are under pressure to defend their job. So is the euro currency. We've seen the euro dollar yesterday very, very close to touching the 105 handle. Yet again, it's been under a lot of pressure. We've had a lot of dovish ECB speak from dovish members talking about the need to possibly go back to expansionary territory. We heard from Villeroy just a few minutes ago. talking about how he sees the inflation hit from Trump tariffs is not his main focus. He is more focused on the downside hit to growth that tariffs entail. We also heard from more doves over the last few days talking about the possibility of an inflation undershoot. One thing though that isn't under pressure, Tom, is Bitcoin. It is flying this morning, crossing the 97,000 handle, all due down to the fact that we've heard from the Trump administration that they're eyeing a White House position for crypto. It's unclear whether this crypto czar would just be a staff position or if it would oversee broadly the federal mandate over crypto when it comes to regulation. But the market is taking this as a positive, and Bitcoin is up basically 3% this morning.
Yeah, sniffing at the heels of 100,000, 97,194 right now, as you say, up just shy of 3%. Bloomberg's Valerie Teitel with a check on these markets in terms of how investors are adjusting to Fed speak and moves around crypto. Thank you. Coming up, we have an exclusive conversation with the CEO of French semiconductor firm Soitec after the company cut its full-year capex forecast. Some questions around the demand as Nvidia, of course, comes in with a beat, but maybe some forecasts slightly disappointing around the edges. So Soitec's coming up. Stay with us. This is Bloomberg. Welcome back. Happy Thursday. Now, French semiconductor manufacturer Soitec has cut its capital expenditure forecast for the full year. The company reiterated, though, its midterm ambition to reach $2 billion in revenue. Joining us now, I'm very pleased to say, for an exclusive conversation is Pierre, the CEO of Soitec. Pierre, thank you for joining us bright and early out of our Paris studio. Talk to us about what these results tell us about the prospects for the business going forward. You've seen first half's results, operating income falling almost 70%, margins squeezed, revenues falling, but you have confirmed your guidance for 2025. What is next year looking like?
Yes, hello, Tom. The semiconductor market we are covering with our engineered substrates products is mixed. Of course, we are addressing a smartphone business first. The smartphone business should grow next year by 3%. Then we should experience a slight recovery in this market. The automotive market we are addressing also gonna continue to suffer in Western world, particularly for the first half of next year, with a better, let's say, trend for the second half. And the AI market we are addressing with our silicon photonics product, as an example, gonna continue to boom, and it is sustaining particularly our guidance for this year to be stable in our revenue, with of course a good traction for the futures, and we see the $2 billion midterm to be reached with this extension and diversification of portfolio.
That's a really interesting breakdown of the different units. So the auto sector remaining under pressure in the first half, smartphones coming back up with an increase of 3% maybe next year, and then that push into AI. Pierre, are you a little behind when it comes to this AI revolution and capitalizing on that? What else are you doing significantly to ensure that you're better positioned for that part of the business?
Well, today, there is no new next generation data centers without Soitec silicon photonics products. We are a company that grows because our ability to interconnect the servers in the data centers to allow less latency, big bandwidth, and lower consumptions, that is a key element for energy, is making us really taking the ride. If you take the growth of this half year of our Edge and Cloud AI divisions, we grew by 57%. Then this is demonstration that this product is really leading the pack.
The stock is down about 60% year to date. Is this enough, Pierre, what you've outlined for me, to convince investors to regain the confidence of investors, or is there more that you need to do on that front?
Well, the fundamentals are very strong. We are keeping our segment shares. We have a very good relationship with our customers in terms of quality and visibility. And we are investing a lot in R&D. While our revenue is dropping by 15% for this first half, we are investing plus 26% in growth R&D because innovation is really the key of everything. Then on the long run, we do believe that our portfolio that is now very diversified, more than 4 units and product units are above $100 revenue, going to continue to develop and going to continue to expand Soitec that used to be a monoproduct company towards smartphone into a multi-markets and products areas in multi-regions. We are global.
How was the plan? Okay, in terms of the US expansion, there was talk you were planning to build a factory in the US. Where are you on those plans? How much progress have you made on that front?
Well, we plan to extend in our US. We don't know the way we're gonna expand. US is a very important market in terms, of course, of product sales, but also in terms of fabless relationships. A part of the innovation are coming from the US, and it's very important for us to expand our footprint in this country. We're gonna precise later the way we're gonna expand in these key pieces of our global expansion.
But Pierre, do you need to accelerate that shift into the US, given the threat of tariffs from the incoming Trump administration?
You know, we think first business, okay? Is there a business reasons for being more, let's say, present in the US? The answer is yes, and we're going to keep that reasons to expand, and we need also to do it in relationship with the needs from our customers. And it's no way to accelerate if business is not there, but we see now that the business is mature for making us more expandable in this country.
I wonder how you think, before we let you go, I wonder how you think Europe should adjust to ensure that we can be competitive when it comes to chips, given the challenges we're seeing from Intel, pausing a factory, for example, in Germany, Global Foundries and ST Micro, their JV in France apparently going nowhere, Graphcore here in the UK stumbling as well. What does Europe need to do to be competitive in this crucial ecosystem?
Look, 60% of our production is made in France, and we are exporting 93% of what we produce globally out of France. We are competitive in France. We have excellent engineers. We have dedicated teams, operator technicians. Then we have no problem of competitiveness and competitivity from this country. What is at stake is to continue to invest in our innovation to lead the pack. I believe where Europe needs to continue to really be ahead is to innovate, to bring on the global market very innovative and fast-forward product. That's really the key of the competitivity.
Pierre Barnabe, CEO of Soitec, the semiconductor manufacturer. On the back of those earnings, we appreciate your time this morning and the context. Thank you. Now, the Biden administration plans to cancel billions of dollars in debt, just short of $5 billion owed by Ukraine. That's before, of course, Donald Trump takes office. The details are next. This is Bloomberg. Welcome back. Let's get you up to speed with some other stories making the news this Thursday. The Danish military is closely monitoring Chinese ship Yipeng 3 near damaged data cables in the Baltic Sea. A high-speed fibre optic cable connecting Finland and Germany was cut early Monday. It's the second incident of its kind in the region in just over a year. And Bloomberg understands that HSBC has abandoned plans to build a carbon credit desk, that's as Europe's biggest bank cools, to a market rocked by repeated allegations of greenwashing. The decision means the bank is no longer working to build a dedicated unit focused on trading credits in the voluntary carbon market or on financing project developers who sell into the market. Coming up, Ukraine fires British cruise missiles at military targets inside Russia. We bring you the details. That is next. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian equities slip, with US futures lower after Nvidia's sales projection fails to meet some of the highest forecasts. The company says its Blackwell chip will ship this quarter. Adani Group shares tumble after US prosecutors charge billionaire founder Gautam Adani over an alleged $250 million bribery scheme. The conglomerate scraps its $600 million bond sale following that indictment. And Ukrainian forces fire British cruise missiles at targets inside Russia for the first time. Bloomberg learning, meanwhile, that the Biden administration is planning to cancel $4.7 billion of debt owed by Ukraine. And we've seen these markets volatile to the geopolitics and the news flow out of Ukraine, of course. We check in on the markets right now with European futures pointing modestly higher after a flat session yesterday, pointing to gains of 0.3%. Here in the UK, the FTSE 100 looking to add 32 points, up 0.4%. Commodities getting a lift so far in the session. S&P futures pointing lower by 0.2 after a flat session on Wall Street as well, just below that 6,000 level. Nasdaq 100 futures pointing lower by 57 points, and certainly Nvidia will be part of the story there. Flip the board, let's have a look at what's happening in the Treasury markets. You had a 20-year auction, not as well received by the markets as some had expected. You saw yields up across the curve yesterday. Today, pretty calm across US Treasuries. 440 is what's being yielded on the benchmark US 10-year. Euro-dollar at 105. Stonaras of the Central Bank of Greece, and of course a member of the ECB panel, suggesting that 2% target could be hit in early 2025. A dove, of course, when it comes to ECB members. Bitcoin continues to grind higher towards that 100,000 level at a record 97,000 right now, up 3% in the session on reports that the White House, incoming Trump administration, I should say, is looking at a particular appointment around the crypto space. Brent trading at $73 a barrel, up 0.4%. Let's get back to the story around geopolitics and the ramping up of tensions when it comes to Ukraine and Russia, because Ukrainian forces have fired British cruise missiles at targets inside Russia for the first time, expanding the use of Western-provided long-range weapons. Bloomberg has learned the UK approved the use of Storm Shadow missiles in response to Russia deploying North Korean troops, considering it an escalation of its war in Ukraine. For more, let's bring in Bloomberg's Oliver Crook. Ollie, how and to what extent has there been a meaningful shift in this conflict over the last few days? Just draw a line under what we've seen in the last 48 hours.
Yeah, Tom, so listen, we'll begin with sort of the deployment of the North Korean troops, which of course was a little while earlier, but this is really the justification that was needed by the Biden administration, and now it seems increasingly other parts of the Western powers to say that yes, Ukraine can use some of these long-range missiles within Russian territory, which had been seen as a sort of no-go zone for a long period of time. Obviously, first it was the U.S. that capitulated on that, Joe Biden, and then generally speaking, this has been the pattern. The U.S. does something, then the European allies are willing to sort of move and support it. The question is, Tom, I think, is this an escalation or is this sort of a path towards negotiation, right? And the same week, you also have Putin sort of lowering the bar for what would require basically a nuclear response, his new nuclear doctrine. Again, that also sort of feels escalatory. That being said, Tom, a negotiation, as we know, does not really begin until two sides name a price. The Ukrainians have named their price very early. It is a return of all their territory, including Crimea, as well as sort of paying for the damages done by the war. Russia may have named their price earlier this week. In some of the reporting that we've seen out of Reuters, basically saying that there is some an openness from Vladimir Putin to talk to Donald Trump about potentially carving out specific regions, potentially returning a very, very small amount of territory, and also part of the sort of conditions would be a blocking of Ukraine ever joining NATO. These are, of course, non-starters from the Ukrainian position. The Ukrainians will say this is too high a price to pay in these negotiations. The Europeans will say the same thing. The question is, Tom, what will Donald Trump say? He will be absolutely instrumental into shaping however this sort of conflict goes, either escalates or ends, and that is going to be the real question here. And I think that there's a real consciousness from both sides, from the European allies as well as Ukraine and Russia. They want to be in the strongest position possible when this wild card of Donald Trump comes in and really maybe sort of creates a new paradigm for this war.
Yeah, and the history of Donald Trump, his verbiage, what he said, of course, his actions as well, suggest that he doesn't sit in the middle between Zelensky and Putin, and that he's leaning slightly more to the Moscow position, would be the argument for some, of course, looking at what he said in the past. Talk to us about what the Biden administration has been and can do in this short window of time it has before the Trump administration takes in to support Ukraine.
Yeah, so they're the immediate things that will have immediate sort of effects on the battlefield, like the delivery of these sort of long-range and the permissions of these long-range missiles. We also had these landmines that were going to be delivered for the first time. We should say these are landmines that become inert after a period of time rather than sort of staying around forever. But there are also some long-term proposals that the Biden administration has been looking at, including potentially forgiving some of Ukraine's debt. And we understand forgiving about $4.6 billion worth of it. Now, we should say that this is debt that is part of that earlier package that was passed over in April of $60 billion. And as part of a sort of agreement on that, the sort of Democrats wanted to push this through as a fully sort of as a gift to Ukraine. Donald Trump from the campaign trail said, why don't we do this as a loan? And in order to get it through the sort of the politics and the Republicans, they had to attach $9 billion worth of debt. Now the Biden administration basically wants to move to cancel about half of that debt. That is obviously going to face a great deal of resistance from a number of people, particularly the Republicans. Rand Paul, the senator from Kentucky, already saying that he needs to block basically Biden from making Ukraine's debt America's problem. They don't necessarily have the votes right now, but of course, given the political climate in the United States and what we saw out of the election, this may be a sort of hard thing to push through. Okay.
Bloomberg's Oliver Crook, thank you very much indeed on what the Biden administration is trying to do to support Ukraine, of course, in these last few weeks of that administration. Now to some other stories making the news this Thursday. The European Union is set to approve France's budget for next year, even as it seeks more clarity on how Paris will control long-term expenditure. Bloomberg understands that the European Commission believes that the French government is on the right track to cut its deficit in 2025 after it presented a draft budget bill with 60 billion euros of tax increases and spending cuts. Sources, though, say the EU wants more detail on reforms aimed at expanding the fiscal adjustment period from 4 to 7 years. Car sales in Europe, meanwhile, are flatlining, leading manufacturers, including Ford and Volkswagen, to push for cost cuts in response to muted demand. New car registrations increased just 0.1% in October compared to a year ago. Declines in France, Italy and the UK largely cancelled out expansion, interestingly, in Germany, the region's biggest car market. And Ford is planning more job cuts in Europe as an industry-wide transition to EVs loses traction. It's looking to slash another 4,000 roles, mainly in Germany and here in the UK. The reductions amount to about 14%, 1/4 of its workforce in the region, and will hit production by the end of 2027. And Bloomberg understands that Starbucks is exploring options for its Chinese operations, including the possibility of selling a stake in the business. Sources say the coffee chain has been speaking to advisors about ways to grow its operations in China, including the potential introduction of a local partner. Archegos Capital Management founder Bill Hwang has been ordered to spend 18 years in prison for fraud and market manipulation tied to the stunning 2021 collapse of his $36 billion family office, capping a case that, of course, riveted Wall Street. Bloomberg TV's Shakil Amari has more from outside the New York courthouse.
Inside the courtroom, Bill Hwang, wearing a pinstripe suit, froze as the sentence was being read. His supporters, on the other hand, dropped their heads in shock. Hwang was remorseful, telling the judge he felt deep pain for what happened to Archegos. Now, prosecutors, they wanted a 21-year sentence because they said that Hwang was a repeat offender in all of this, because back in 2012, he pled guilty to insider trading with another company, Tiger Capital. Now, on the other hand, his defense, they wanted no jail time, but the judge says that was utterly ridiculous. Back in July, 60-year-old Hwang was found guilty of 11 criminal counts, including wire fraud, securities fraud, and market manipulation, after prosecutors say he orchestrated a scheme to mislead his bank counterparties into providing his company with billions of dollars. The implosion of Archegos caused significant losses to major banks, including Morgan Stanley and Credit Suisse. Now, after imposing the prison sentence, the judge says he won't make a decision on restitution because more information is needed, and that the defense and the prosecutors have until December 5th to file briefs. In Lower Manhattan, Shaquille Omari, Bloomberg.
Okay, staying in New York, slightly different story though. Artwork consisting of a piece of duct tape and a banana stuck to a wall has sold for, wait, hang on a second, what, $6.2 million at a Sotheby's auction in New York. The buyer is crypto entrepreneur Justin Sun, who told Bloomberg he's considering paying with cryptocurrency. Bitcoin, of course, hitting a record of nearly $97,000 around the time, $95,000 around the time of the auction, $97,000 right now. I just slipped up on that number. But there you go. Banana artwork being sold to a crypto entrepreneur, duct tape and banana. Would you take it for $6 million US? Coming up, as investors digest Nvidia's disappointing forecast, around the edges at least, we speak to the CEO and co-founder of PolyAI, one of the hottest tech and AI companies here in Europe. We're going to discuss demand for the company's voice AI product and the outlook more broadly for artificial intelligence. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, chip giant Nvidia's revenue forecast failed to meet at least the highest expectations, and those expectations were once again pretty stretched, suggesting that its dizzying AI-fueled growth run has, at least on the edges, some limits. Let's speak to another player in the AI space. PolyAI produces AI voice assistants for call centres, recently secured a valuation close to $500 million, raising $50 million in a funding round from backers including Sophia and N Ventures, backed then by Nvidia as one of their key backers. I'm joined now, very pleased to say, by Nikola Mrksic, the CEO and co-founder of PolyAI. Nikola, thanks for joining us from frosty Helsinki at the Slush event, a really key event, of course, for venture capital founders and investors. Let's talk about the monetization of AI, because you're kind of at the coalface of this. You have that front and that touch point in terms of the demand. Is there any sense from you, because this is a key question when it comes to Nvidia, is the monetization story starting to fade when it comes to AI? Are you seeing any cooling of demand?
Oh, absolutely not. I think that people are confusing two things. One is there is like the first wave of kind of like people buying chips and GPUs to kind of like fuel their future growth. And then in parallel, there's like a story of even greater exponential growth just from a lower base of enterprise adoption of AI for their workflows, for their customer service, sales, and many, many other things. So in our case, growth is like a lot higher. I think like Nvidia kind of like, share price falling is just because people have gotten used to them like so wildly exceeding their expectations. But really, I mean, it is the most valuable publicly traded company. And I don't expect anything changing because wherever we see wins in AI, the house always wins. And they, at the moment, are so dominant that I don't see a reason to be pessimistic about their outlook.
Okay, the house always wins. And they're a backer of you. What is that relationship like, Nikola? How important is that relationship? Do you get better access to compute as a result of that access? How close is that relationship with Nvidia?
It's pretty close, yeah. I mean, like, it means that we got like access to compute. It means that we're just able to kind of like work with them on their further strategy and like working on models, data integration, all of that stuff. So it's a pretty important relationship, and they're the company when it comes to this space, that Nvidia and the hyperscalers. So for us, it's super important. And as we drive our adoption of these models for the enterprise, I think we are that translation layer between what people see and expect when they from the initial reaction to ChatGPT and onwards, and then on to like there's just a bit of time lag while we kind of like translate that into huge ROI for the enterprise. Now, I think that a lot of companies are doing really well. We're like growing incredibly fast. I think it's just a matter of kind of like allowing smaller companies like us to reach a scale where you see a greater impact in society as a whole. But we take hundreds of millions of calls a year. And these are like nearly human-like interactions where most people don't even know that they're speaking with artificial intelligence.
Yeah, so you're breaking down that barrier because it can be. We all know it can be deeply frustrating, can't it? To be on call or on hold at a call centre, whether it's an automated voice or a human voice or the wait time, and you're trying to break the back of that frustration.
Absolutely. Look,
what is the potential market? What is the Yeah, right. Okay. So are you breaking? Do you face resistance from clients who say, "Look, we don't need another voice bot. Like it just really annoys our customers." Do you face that pushback? And how big is the total market size?
So, okay, the market size. Look, there's $1 trillion of labor spent between Western Europe and North America on contact center labor. You look at CCaaS vendors, the leading ones. In total, they make about $10 billion of revenue. In the whole narrative of software eating the world, they've captured 1%. We need to seriously eat into the labor. Now, COVID and onwards, we have a crisis of customer service in Europe, in America, around the world, where companies are just struggling to meet callers in the channel of their choice. And look, that's voice, by and large. It's 75% of all customer service contact, despite all the pushing towards digital chat, web, email. People prefer to just pick up the phone and call. Now, you're right. Customers, they don't say that they don't need a voice bot. Customers want to do the best job they can for all of their callers and consumers, right? And we're helping them become the best version of themselves. Is there skepticism? Is there hesitation? Yeah, absolutely. I think especially in North America, where that first generation of voice IVR has disappointed and frustrated people for more than a decade. What helped is the new generative wave and people's belief that we can now do a lot better. And we're doing a lot better, right? Across all of our deployments, we improve CSAT and NPS scores relative to the starting human base. This doesn't mean we'll automate everything, but it means that a solid 50 to 75% of all interactions you have with a contact center in the future will be happening with voice AI, and they'll be better for it.
Yeah. Nikola, one of your early investors is Cola Ventures, who backed, of course, OpenAI, and pretty early on, they took a big bet on OpenAI. Does OpenAI keep you up at night? I mean, do they end up just steamrolling your business?
Absolutely not. Sam Altman is the guardian angel over my left shoulder, you name it, right? I think if you think about companies that are kind of like AI first, like PolyAI, there are a lot of other companies that are LLM wrappers, right? That now see the opportunity to use OpenAI's technology to finally start doing what we've been doing for about 7 years now, right? We've had transformer-based models from 2019 that we've been applying with our customers. So this is just wind in our sails. The moment OpenAI in public perception became what it is, we started getting more than half of our deals inbound, right? I didn't think that would happen for a very, very long time, right? Now, Altman would tell you that, don't bet on being the company that pushes LLMs a bit further and then kind of like having that as your moat. Your moat can be in your customers, in your distribution, in your design, and in your data, right? Now, I think we have more data than any other company when it comes to phone-based conversations in customer service for voice. That's our moat that makes speech recognition work, that makes LLM tuning better, and that creates that incredibly human-like voice. And that's also design. We've been working with voice actors to create the most lifelike voices that exist in the market. So when you put it all together in the context of customer service, our moat is really, really deep, right? And what's interesting is that, there are companies that are trying to challenge us, and then Sam Altman comes for them in 6-month increments. So we thank him for all that he's done for PolyAI.
Okay, he's the angel on your left and right shoulders. Hey, Nikola, look, you're there at the Slush event because this is this biggest gathering of VCs and founders globally, arguably, in terms of the numbers. What is your sense on the ground in Europe? Can Europe compete? I mean, the US has this kind of, to some extent, some would say unassailable lead when it comes to AI. You have the Trump administration coming in. Some will say that's going to supercharge that shift. Is Europe being left behind? Can you and European entrepreneurs compete?
Look, I am European. I'm Serbian. I'm an European entrepreneur that lives in London, spends 4 to 5 months a year traveling around the US and working at least East Coast, if not West Coast hours when I'm in London to work with my team. Most of our revenue is American. American enterprise adoption, their economic growth, like that economy and that country is just phenomenal, right? So they are the driver behind AI adoption. Now, we do some great work in Europe. I think that in Europe, we have the chance to leapfrog the automation because we've had much less bad experiences with voice automation in Europe than the Americans have had with the early versions there. So there is a chance for Europeans to do a lot. And in parallel, we're doing a lot. We're trying, right? But, look at economic growth, look at the fragmentation of the market. America is where it's at, sadly. Well, not sadly. I mean, it is a phenomenon.
America's where it's at. Yeah. Really interesting, really fascinating context, Nikola. Really appreciate your time. Nikola Mrksic, CEO and co-founder of Nvidia-backed PolyAI, previously worked on Siri as well. Nikola, appreciate your time and conversation. Thank you. There's plenty more coming up. This is Bloomberg.
I have a feeling that we've reached peak Nvidia.
How long can you stay perfect, right? So I think that, I do think that a lot of investors are expecting a little bit too much.
There's a little bit of this kind of fatigue, but make no mistake, this was a remarkably good quarter.
What they're putting up in terms of Hopper, in terms of overall growth, it's exactly what the bulls want.
Never underestimate Wall Street's ability to miss the bigger picture. This company has double the operating margin of any other Mag 7 outside of Microsoft. To nitpick Nvidia on those margins is truly missing the big picture.
Okay, some of our guests discussing Nvidia's latest earnings then, and let's break down the numbers for you. There's a bit of hand-wringing, of course, in terms of the guidance, but on the quarter, this was a beat. Let's break down in terms of what we saw from revenue. 35 billion in the most recent quarter then. Third quarter, 35 billion, coming in above the estimates. A beat on estimates, a beat on earnings, I should say, in terms of revenue. Earnings per share, also a pretty comfortable beat. Net income, a beat as well. Gross margin, this is a story to think about when we look at the projection for the current quarter, and I'll give you the details on that, but that came in just marginally softer than the estimates. It's going forward that's the concern for some. Sales outlook 37.5 billion, not at the top end. The top end range saw 41 billion, and that's the expectation story. In terms of the guidance then, this is important in terms of the guidance for the current quarter. And I wanted to talk to you about the margin story because the expectation is that margins, gross margins, will actually cool a little. They'll go from 75 to around 73%. By the way, that is pretty much double what Intel sees, but still, it's a little cooling in the margin because they have to spend all this money in terms of the engineering around the Blackwell before that Blackwell chip is really taken up in huge numbers by some of their key customers. So that could be a bit of a fly in the ointment for this company, which of course is stretched in terms of valuations, would be the call and view from some. Blackwell production, full steam. That's the key chip, of course, in terms of move from Hopper to Blackwell. So we're looking at that. Shipments expected in the fourth quarter of 2025. They've had a few snags in terms of engineering, but they do expect them to get into the hands on a bigger scale when it comes to the hyperscalers. And in terms of the hyperscalers, really interesting in terms of the concentration mix, that's actually increased for the likes of Microsoft and Amazon. That could be another point of concern. It's gone up from 50% to 50% from around 45%. That's something that investors want to see go in the opposite direction. So look at that as well. Coming up, don't miss our exclusive interview with Gary Cohn, Vice Chairman of IBM. That's at 1 p.m. London time. The opening trade, though, is up next. This is Bloomberg.